Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Ben Jones, product development specialist with Nasdaq Index Research, joins me this afternoon for an update on Nasdaq 100 performance for September as the month and quarter comes to a close next week. Ben, certainly time is flying by and not a September to remember, but we also have to take a look at performance and also put into perspective with where the index came from. It's not that unreasonable of a reset when you take a look at it in that context.
Yeah, for sure. I mean, it's you try to remember it was kind of September, and we really haven't seen it since 2008, right? I mean, the Nasdaq 100 is down about 10.5% right now, basically erasing kind of your gains from August. So we like to kind of we used to call it kind of a pause that refreshes, so to speak. The worst September that we've seen lately, you have to go back to 2008, which was the Nasdaq 100 was down about 15.5%. And so definitely it's been a tough month so far, for this index and some of its constituents. It's not as faring as well as, let's say, the S&P 500. S&P 500 is only down about 7%. So it has been, we've seen a lot of the growth and technology areas within the market pull back a little more severely. What's also interesting is that it's right now the worst month for the year, right? Which is surprising when you think about it, probably headline generating or maybe clickbait, so to speak. But if you take into account the full trading months of February and March of this year, the Nasdaq was only down about 5.9% in February and down about 7.7% in March. I mean, again, it had that late rally in late March where we just saw that V-shaped rally off the bottom. So it's certainly been a struggle. The good news, though, is that we are seeing some internal breadth still stay in place, at least on a long-term basis. Certainly we've seen some short-term selling pressure. Definitely recommend going to dorseyright.com if you want some technical indicators. Right now, looking at one of their indicators is the Nasdaq 100 bullish percent, which measures the percent of Nasdaq 100 components or stocks that are on point and figure buy signals. Right now, it's only around 32% of these components are on buy signals. This is down from a high in July of 84%. 30% is typically, once it crosses below that level, you're kind of in an oversold status. So we're not there yet, but we are certainly close. The good news is, Jill, is that the long-term trends are still fairly positive, right? When you look at, let's say, the PT chart, which measures the percent of stocks in the Nasdaq 100 that are trading in positive trends, it's hanging around 76%, coming down from a high of 92% from about a month ago. We like to see this indicator above 50%. That's typically a healthy market. So overall, certainly a lot of short-term weakness. It's been a pullback, maybe a pause that refreshes. Long-terms are still, certainly positive, and the index is still positive for the year. It's just been a tough September, Jill.
All right. Now, what if we take a look at equal weight versus cap weighted? Is there any discernible difference there with how it's performed?
Yeah, there is. And I wanted to show this for viewers just because, again, there are different permutations of this index, right? So you have, the Nasdaq 100, the NDX, which is the traditional kind of cap-weighted index, right, which is going to be overweight, those large cap names, the likes of, Apple and Amazon, et cetera. But the equal-weighted version is basically, treating all the Nasdaq 100 constituents the same way and basically giving them an equal weight. So even the smaller size names in this index are treated the same way as Apple and given the same weight, during the rebalance period. I like to use kind of the analogy of, the Senate versus the House of Representatives. House of Representatives, the larger the state, more populous it is going to get more votes. While the Senate, Delaware gets the same amount of votes as Texas, so to speak. So when you look at the equal weight versus cap weight Nasdaq 100 index, you're able to pick up on some subtle themes. And, I think I talked about this a month ago. What we have seen is that, the larger cap names in this index are leading some of the downside right now, right? And that's just, based off of picking up of the performance themes where the equal weighted index is actually held up better than the cap weighted index in the month of September. But again, that makes sense, right? Where the index is, heavily weighted towards those large cap, tech names especially, they've had a tough September, right? Microsoft is off about 11% this month. Google's down about 13.5%. Facebook's down about 15%. So those areas, have struggled this month, but certainly those areas were, leading the charge for most of the year, right? And that's kind of that pause, that pullback that we've seen. So right now the equal weight is only off about 6.5% compared to about 10.5% for the cap weighted traditional Nasdaq-100 index.
Yeah, that's really interesting that you point that out. And I remember it was in August when we just went completely from the bottom left to the top right of the chart. And that's great that you were able to point it out that way, where you can see the divergence of performance there. And it makes total sense. That's really a great way to encapsulate all of that. So to wrap up here, I'm going to ask you to look at one more thing. Let's look at Nasdaq-100 technology versus non-technology and see how that performance looks.
Yeah, and again, this is kind of along the same lines as the previous graphic. It's just saying trying to look for attribution, right? Where are we seeing some of this weakness? Where are we seeing some of this downside action, so to speak? And the question arises, right? Is this a technology specific pullback? The answer is no, right? We've seen a pullback really across the board, as evidence of just the first graphic of looking how the S&P 100 has pulled back as well. But we have certainly seen the technology area hit the hardest, so to speak, within this particular index. And so what this graphic shows you is the Nasdaq-100 technology sector index, so just focusing on those technology names, and the Nasdaq-100 X technology, so excluding, removing those the technology industry and all those constituents. Keep in mind that the Nasdaq-100, at the end of August was around 57% technology, so heavy in that industry. What's interesting is that right now the Nasdaq 100 technology index is down about 7.94%. This month, while the X technology is only down about 5.83, so separated about 2%. So we have seen some of the non-technology names hold up a little bit better, but it's really been market wide where you've seen kind of this pullback, this sell-off take place, and it'd be interesting to see. We'll be able to see some more positive momentum to the end of the quarter. I guess we have a few more days to find out.
All right, Ben, great stuff. Thanks for joining us on Trade Talks.
Thank you.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.